Assalamu alaikum wa rahmatullahi wa barakatuh. This is Mohammed Aljaber here in another video, continuing on with chapter 6 exercises from our Managerial Accounting course. In this video we're going to look at exercise 6-14A, and this exercise is or relates to segment elimination decision. Okay. As we covered in class, we talked about companies and how they typically segment their processes over multiple segments, whether that was different product lines, different divisions, or whatever that might be. So let's see the situation we have here with this company. It says Buckley Company operates 3 segments. Income statements for the segments imply that profitability could be improved if segment A were eliminated. Segment A being this data here in the first column, right? And here we have income statements for the year 2018. We have sales, cost of goods sold, sales commissions, deducting the cost of goods sold and the sales commissions from the sales figure, we get contribution margin. And then we have some other expenses, including general fixed operational expenses, which says here between the brackets, it's an allocation of the president's salary, right? And this is a key piece of information that we're gonna come back to shortly. And also we have another expense, advertising expense, which says it is specific to individual divisions, right? And then we have the net income, of course. And as you can see from the data compiled here, we have segments B generating 140,000 in net income, and segment C generating 174,000 of net income, whereas segment A, based on the data provided, generates a negative 40,000, or a net loss of $40,000. Okay. So what is required? We are required to do 2 things. First, we need to explain the effect on profitability if segment A is eliminated. So we are going to consider how is the if the segment should or should not be eliminated initially, and then we're going to prepare a comparative income statement for the company as a whole under 2 alternatives. 1, if segment A was retained or kept in business, and 2, if segment A was eliminated. All right, so let's go over it. First, as always, we need to decide or determine what are the relevant information here. So what we're going to look at is this column especially. This is the segment that we are considering to eliminate, right? And out of these data here, or out of these items, we need to see which ones are relevant and which ones are not. What I'm gonna do this time, I'm going to mark each line just to make sure that I don't forget anything, right? So first of all, the sales revenue. Is it relevant or not? This 330,000 expected revenue, of course, is relevant, because if we eliminate segment A, we're gonna sacrifice that revenue. We're no longer gonna make this much. So our revenues are going to be decreased by 330,000. So first of all, the sales figure is relevant. So I'm gonna just put a tick mark right next to it. Second, the cost of goods sold and the sales commissions. Yes, they are both relevant. Why? The cost of goods sold actually covers the cost of manufacturing the product that is sold within segment A, and sales commissions is the cost that we incur to advertise maybe or sell those costs through our salesmen. So each sales transaction would incur a certain cost that is charged by that sales representative. So all of these are also relevant. Okay. We're not going to worry about contribution margin because it's basically just the revenue minus those 2 costs. which are the cost of goods sold and sales commission, so we'll skip it. And then we'll go to the interesting part, general fixed operational expenses. And as I said, it says allocation of president's salary. So this is basically the president's salary split into the three segments. So the 92,000 is not actually the whole amount of the president's salary. The president's salary is 92,000 multiplied by 3. 92,000 multiplied by 3. That's 276,000. So think about this. If we eliminate segment A, take it out of the picture, are we going to reduce the president's salary? Most likely not. The only thing that will happen is that that specific 92,000 is going to be reallocated to the other two segments. So what will happen is that the 276,000 is going to be divided by 2 instead of divided by 3. And this will become 138,000 for each of the segments. 138,000. All right. So that means this specific expense is not relevant. Why? Because whether we eliminate segment A or not, we're still going to incur this cost. It's not different under the two alternatives that we are considering. Okay. And then the last item is the advertising expense. And on top of that, between brackets, the question is telling you that this is specific to individual divisions. That means that 6,000 is actually specific to segment A, right? So if we eliminate segment A, that 6,000 is not going to be, we're not going to incur that cost anymore. So that makes it a relevant cost. Why? Because it's different under both scenarios. If we keep segment A, we're going to spend 6,000 on our advertising expenses. If we eliminate segment A, we're not going to spend that 6,000. Okay, so that is also relevant. So as you can see, the only irrelevant cost here is the allocation of the president's salary, okay, which the company or the company's accountants is incorporating into general fixed operational expenses. Okay, so let's go ahead and record all of our data. Here, we're going to determine the relevant revenues and costs. And here, we're going to list the amounts. Relevant revenues and costs for segment A, of course. Just put A in between brackets. First, the sales figure. Sales, 330,000. If we eliminate the segment, we're not going to make this amount. We're not going to generate that revenue, that portion of our revenue, 330,000. So we're going to include it. That makes it relevant. And then cost of goods sold, which was 242,000. 242,000. And sales commissions. Sales commissions, which was 30,000 for segment A. And finally, advertising expense, which is 6,000. Okay, so here you have the relevant revenue, and here you have the relevant avoidable costs, right? We will total that up, and that total is going to give us the effect on income. So let's see. Using our calculators, 330,000 minus 242,000 minus 30,000 minus 6,000. That's $52,000, which means if we decide to eliminate segment A, this is the amount of profit that we're going to sacrifice. Okay. So the question was, again, explain the effect on profitability if segment A is eliminated. So we can write something along the lines of eliminating. Always remember to go back to the question and answer the direct question that is written to you in your exam. Okay, so eliminating segment A will reduce, let's go back and see the company's name, Buckley Company, will reduce Buckley Company net income by $52,000. Okay. So quantitatively speaking, would Buckley Company be better off by eliminating segment A? No, because that actually will reduce their net profit or net income. All right. Now let's go back to the other requirements. B, it says prepare comparative income statements for the company as a whole under two alternatives. One, the retention of segment A, and two, the elimination of segment A. Remember, managerial accounting reports don't really have to comply with generally accepted accounting principles, right? They don't have to conform to GAAP because they are internal reports, right? So as long as you have accurate calculations and you can get your point across in a clear fashion to your management, you've done your job, right? So what we're gonna do here, hope I have enough space. No, let me add another page. We'll say, let's say income statement. You can call it like income statement, or you could say relevant information or decision factors, whatever you like to call it. But we do have two scenarios, so we need to include them. Let's say with segment A, and here we'll say without segment A. All right, and we will redo our income statement following the same formats. So here, sales. Okay, I'm sorry, I'm gonna have to take you up and down a little bit with me so I can get the numbers. If we kept segment A, our sales is gonna be the total here, right? 330,000 plus 480,000 plus 500,000. So let me do the math. 330,000 plus 480,000 plus 500,000. That's 1,310,000. 1,310,000. What about if we eliminate segment A? We're gonna reduce this amount, the 1,310,000, by the revenue here that is generated by segment A alone, right? So 1,310,000, which is still in my calculator. I'll just subtract 330,000. That will be 980,000. 980,000. Okay. Then we will include our cost of goods sold. Again, going back to the original data, that will be 242,000 plus 184,000 plus 190,000. So I'll run the numbers. 242,000 plus 184,000 plus 190,000. That's 616,000. So if segment A is kept in place, the cost of goods sold is going to be 616,000. If it was eliminated, we're going to subtract the cost of goods sold associated with segment A only, which was here in our answer for A, 242,000. So 616,000 minus 242,000, that equals 374,000. Okay. And then we'll add our sales commissions as well. Go back to our data. Sales commissions, 30,000 plus 44,000 plus 44,000. So I'll write 44,000 multiplied by 2 plus 30,000. That's 118,000. 118,000. And then I'll subtract the sales commissions associated with segment A only, which is 30,000. That will give me 88,000. So if we eliminate segment A, our sales commissions cost is going to be reduced from 118,000 to 88,000. Okay. Now again, we can calculate our contribution to margin. Contribution to margin. 1,310,000 minus 616,000 minus 118,000. That's 576,000. 576,000. Okay. And then 980,000 minus 374,000 minus 88,000. That will be 518,000. Okay. Now we deduct operational expenses. Operational expenses include, what was it called? General fixed operation expenses. General fixed operating expenses. The total salary of that president, which we already calculated before, it was 92,000 multiplied by 3. That's 276. Yani 92,000 plus 92,000 plus 92,000, right? 276,000. Now this is the only line item that will not be affected. So including segment A or eliminating segment A, the president's salary will stay the same. So I'll just rewrite this amount again here, 276,000. Okay. And then finally, advertising expenses. If we include segment A in our calculation, that will be 6,000 plus 20,000, right? So 26,000. 26,000. If we consider eliminating segment A, that amount will be reduced by this 6,000, which was associated with segment A, right? So we will eliminate this and we'll only consider the 20,000. So here, 20,000. Okay. And then we can calculate our net income under both scenarios. Okay. I'll quickly run the numbers on my calculator. The contribution to margin was, including segment A, was 576,000 minus 276,000 minus 26,000. That's $274,000. That would be the company's net income, Buckley Company's net income if they kept segment A. And under the other alternative, which excludes segment A numbers, so 518,000 minus 276,000 minus 20,000. That's 222,000. And what's the difference between those two scenarios? The net income under the assumption that we're gonna keep segment A, which is this 274, should be more than the assumption or the other alternative, which eliminates segment A by this amount we already calculated here, the 52,000. So let's confirm. 274,000 minus 222,000, and I get 52,000 difference. Okay, which is the same as what we have calculated here. All right. Now going back to B, just prepare comparative income statements for the company as a whole under the two alternatives, the retention of segment A and the elimination of segment A. That's it. You don't have to comment any further. It did not really ask you a question here. They just wanted you to recreate the income statement under both scenarios. But if you wanted to be a little more fancy and you wanted to add a comment, you could say that, again, same thing that what you said before, that since segment A contributes what was it, 52,000, sorry, $52,000 to the company's net income, the segments should not be eliminated. Sorry. Eliminated. All right. So that is going to be our answer for part B of the question, and here is our answer to part A of this question, which was exercise 6-14A. Hope you guys enjoyed this video and found it useful. I'll hope to see you in the next one. Take care.